All right, let's talk about the 2008 financial crisis. For most of us, it just felt like this massive, complicated storm that just appeared out of nowhere and completely wrecked the global economy. But was it really just an unavoidable accident? Or was there something more deliberate going on behind the scenes? Well, today we're going to dig into one really powerful argument that says, you know what? This was no accident.
And here's the claim, right at the heart of the source material we're looking at today. The 2008 crash wasn't an accident, it was a real deception. I mean, that is a heavy accusation, a deception. So we've got to unpack that. What does that even mean? And how could a deception on that scale even be pulled off?
Okay, so to really understand this idea of a deception, first we have to look at the crime scene, right? The aftermath. We have to see just how devastating this whole thing was. Because these consequences, they weren't just numbers on a spreadsheet. They were very, very real for millions of people. I mean, the wreckage was just staggering. You had Lehman Brothers, this Wall Street giant that had been around for over 150 years, just gone, vanished. And then you had millions, literally millions of people all over the world losing their homes. And for so many others, their life savings. I'm talking pensions, retirement funds, everything they'd worked their entire lives for. It just, poof, it was gone. So that brings us to the big, big question. What on earth could cause this kind of destruction on a global scale? I mean, what was the actual trigger that made the entire system just collapse? Well, believe it or not, the trail leads us to a type of financial product with a really catchy and actually a very telling name. Let's dig into the truth about something called ninja loans. Yeah, you heard that right. And the acronym, well, it tells you pretty much everything you need to know. Banks were handing out these huge home loans to people with no income, no job, and no assets. I know, it sounds completely absurd, but this wasn't just a few bad loans. This was happening on an industrial scale. Our source for this explainer has a fantastic word for these: kachra loans. It basically means junk or garbage loans. And honestly, that is the perfect description, because that's exactly what they were. They were loans pretty much designed to fail, given to people who had absolutely no way to pay them back. Okay, but this is the million-dollar question, right? This is the core of the puzzle. If these loans were so obviously junk, I mean, just garbage, how in the world did they manage to infect and bring down the entire global economy? How did all this financial garbage get spread everywhere? Well, the answer isn't so much in the loans themselves, but in the, let's call it a magic trick that Wall Street performed with them. This right here is where the whole deception really starts to take shape. And this slide just lays out the whole illusion perfectly. On one side, you've got the reality, kachra loans, total junk. But on the other side, you've got the appearance that Wall Street created, safe investments. They basically figured out a way to take a whole bunch of junk, package it up, put a really shiny, trustworthy label on it, and then sell it to the entire world. So let's break down exactly how this trap was set. Step 1. Simple enough, banks just hand out these risky ninja loans like crazy. Step 2. Wall Street comes in and buys up thousands and thousands of these kachra loans. They chop them up, mix them all together into these super complex bundles, and then, and this is the really critical step, they get these bundles stamped with a AAA rating, the highest seal of safety, and sell them to pension funds, to other countries, to investors all over the globe as if they were rock solid, totally secure investment. And then the inevitable happened. The housing market, which had been propping this whole thing up, started to fall. All those ninja borrowers couldn't pay their loans anymore, and just like that, overnight, all those quote-unquote safe investments that were sitting in accounts all over the world were exposed for what they really were: completely worthless junk. And that's when the dominoes started to fall fast. The whole system just seized up and collapsed. So, after seeing all of that, what's the lesson here? I mean, what's the one big takeaway from this whole disaster that might, just might, help us spot the next big storm before it hits? Well, the ultimate takeaway is pretty clear. The 2008 crash, it wasn't just some random market failure. No, according to the source we're examining, it was the direct result of a system that was built on a deception. It was all about taking something that was incredibly risky, doing a great job of hiding that risk, and then selling it to people as if it were completely safe. And that leaves us with a final and, I think, really powerful warning from our source material. Remember, when money seems too easy to come by, understand that a big storm is about to hit. It sounds so simple, right?
but it's a lesson that, when we forget it, can have absolutely devastating consequences for, well, for all of us.